is you want to start early and invest into all of these different types of financial assets and grow them until you have a large enough cushion to become financially independent. Hello everybody, this is Ronin Blue, and I'm out in the wild today. And today I thought I'd talk about the topic of planting financial seeds since spring just started. So for the last 14 years, we have been investing into numerous different asset classes. So many to mention. And then we actually did not have a financial advisor at all. We did it all ourselves. And really it doesn't take that much time to find out all the research that you'll basically get from a financial advisor anyways. But in the most cases, what a financial advisor would advise you to do to invest into would be the 401k or the Roth IRA. I believe in Canada it's called the RRSP, and the tax-free savings account. It's basically all the same thing, the same function. You can invest into index funds, mutual funds, ETFs, stock dividends, and bonds as well, into pretty much all of those. But we put more lump sums of money into certain ones other than other ones. But we probably invested most into stock dividends. Now, index funds are pretty much like dividends. They're a batch of different companies, roughly around 100 to sometimes 500 into one package, where all of those companies do distribute dividends on their separate schedules. If one particular country does fail, it goes bankrupt or for one reason or another, you wouldn't really feel it for your overall portfolio. So they're considered to be very low risk. But the thing is, the returns aren't as high. But we still invest into it on a monthly basis. But where we put the majority of our money would be into stock dividends. And for that, you have to individually pick companies. And we get distributions that come in on a quarterly basis or a yearly basis. And some of them actually have monthly dividends as well. The returns for dividends are much higher than those other investment vehicles I spoke of before, such as the index funds or ETFs. But with that comes with a lot of a risk as well. So what we do for our dividends is we always pick the leaders in the industries, such as in the financials or the industrials, and make sure that they have a good balance sheet. Have a dividend portfolio. It's always best to do your due diligence on each of those companies as well. You want to see, probably the most important would be the dividend payout ratio. The lower the percentage, the safer it is. So if you encounter a company that has a very high dividend yield distribution, you want to kind of stay away from them, because it basically means that they're focused more on distributing dividends other than reinvesting any surplus that they have for that company into something else that's for the growth of the company. And another cool thing about dividends is that the taxational rate for dividend distributions aren't very high. So right now within our stock portfolio, full of dividend players, there's probably around 27 companies that we have. So by having all of those companies in one portfolio, it's like creating your own index funds and creating that buffer. Return is much higher, because for index funds, you're looking at maybe a 1.5% to 3% returns, pretty low. But for dividends, you're looking at like 3% to sometimes 7%, which is crazy. To look at REITs as well, real estate investment trusts. It's almost like owning property, but you do so with a whole bunch of other people. The returns for REITs are really high as well. But probably one of the best passive income streams or residual income that we have is through our through the rental of our condo. So that's a great way to get some stable income as well, and with little effort as well, especially for us because we have a property manager, but it's well worth it because you don't have to deal with the tenants or any maintenance issues. So that's going to be great for us when we go abroad. But of course, there's a whole bunch of different other options that people take as well, not just investment vehicles, but they actually use their own skill sets to create that side job. So that's really hard to say what people do because everyone's different and unique to their skill sets. You can also always get that part-time job as well, get that extra income by driving an Uber or some other side hustles. You want to start early and invest into all of these different types of financial assets and grow them until you have a large enough cushion to become financially independent if that's what you're looking to do. People do is they do the research and they hop from one financial method to the next, but the thing is they don't stick to one financial method. They hop from one to the next, and it's very much self-defeating because they don't focus and concentrate on one method. So I'm not saying that my method investing is the almighty, but it has definitely worked for us. So we have about 30% in rental property. We have 30% in stocks, a mixture of all those assets I mentioned earlier, and 30% in bonds. I also have my day trading as well. I also have the appreciation of my stocks as well. And I have this YouTube channel that has recently been monetized as well. So for all of those things in combination, it has pretty much made a good nest egg for us. So once we get to the age of 65, we're not really expecting much for Social Security, but that's going to be considered more or less like a bonus for us. So I think we'll be okay with all of these different financial assets and also incomes that we're creating in our early retirement. Well, I think I'll end my vlog here today. Tell me what you thought of all the different investment options that I've mentioned. Maybe you can mention some of your own down in the comment section below. If you like this vlog, please don't forget to give me a like, subscribe if you haven't already, and hit that notification bell for more of my coming content here. Thank you for watching my vlog. I hope you have a great day and see you soon.